modern industrial society, only minimal effort is necessary to satisfy one's physical needs.
I am a big believer that people's understanding of these new opportunities and people's excitement about these new opportunities is really starting to ripple out from the original core sets of investors. And as more companies, as more asset managers, as more individuals, as more advisors become understanding and excited about this growth opportunity, that demand is going to continue to come in and expand the markets. Don't forget, crypto is still only looking at about a $3 trillion market cap. That compares to 100 trillion of assets that are being professionally managed. So there's plenty of room for this allocation and these interests to grow. And when there's incoming demand, that really does create a underpinning of support in a market that allows prices to really have that stability that lets them explore whether they can push higher.
We are witnessing the financial system evolve. We're seeing corporations add Bitcoin, XRP, Ethereum, and other digital assets to their treasury. Stablecoin legislation is being passed, and this is going to allow banks and other financial institutions to accept stablecoins through payment rails. Understand that having stablecoin legislation allows stablecoins to be the base layer of the tokenized economy. Now that stablecoins have the proper legislations, they can be considered pristine collateral. And this collateral could be used for things like tokenized securities, derivatives, commodities, etc.
On Wall Street. We are expecting an update from the SEC on the spot XRP ETF proposed by Franklin Templeton. And I'm not going to ask you to speak on those filings specifically. I know you can't, but I think it gets to a larger question I have around Wall Street appetite for these products.
So I think that we're at a very important kind of inflection point around demand, right? When we first launched these crypto ETFs, there was a surge of institutional interest and a surge of individual interest. But the main route to market for most Americans is through their advisor networks, right? And these advisory platforms have been taking a longer time to really assess the viability and assess the track records and assess the operational ongoing operations of these new products. So we are starting now to really see the pathway for the wealth platforms to begin offering these products as part of an everyday portfolio, right? Having a diversified portfolio that includes equities, includes fixed income, includes alternatives is really the pathway that we see wealth heading, these well-diversified portfolios. And crypto allocations to these ETFs are becoming a standard part of those new model portfolios that are driving the wealth.
When she was asked about the XRP ETF as well as other altcoins, her response is that this is going to allow institutions as well as wealthy individuals to allocate a portion of their portfolio into these altcoins through an ETF wrapper. Understand that regulations are set up for the SEC, they're set up for the traditional markets, and this closes the door for a lot of different people to invest in digital assets. So by having these ETF wrappers, they're able to buy the stock and put it in their portfolio, and then they have exposure to XRP, to Bitcoin. Before we continue the show, I'd like to take a moment to thank iTrustCapital. iTrustCapital is a service that specializes in crypto and precious metals IRAs, or individual retirement accounts. This is where you can trade or invest in precious metals or crypto without worrying about taxes. The government's going to continue to print, and as they print more and more money, they're devaluing the dollar and pushing asset prices up higher. IRAs are a legal way to circumvent taxes. So check it out at iTrustCapital.com/Darren. If you use this link, you can get a $100 bonus for signing up and funding your account.
Industry. So it has taken a little bit more time for the wealth platforms to get to this point, but we are seeing great progress there. And I think that within the next 12 months, you're going to see, particularly as regulatory certainty becomes a little bit more clear, you're going to see great uptake and adoption and the inclusion of these products in model portfolios, such as we have been able to do at Franklin Templeton.
She gives the timeline of the next 12 months for regulatory clarity, and this is going to pave the way for adoption. It turns out that JP Morgan just recently had a meeting with the SEC on using public blockchains for capital markets. And capital markets is another term for things like the stock market, the bond market, the options market. These are some of the largest markets in the world. And as they are given the green light by regulators, this wealth comes into the crypto world.
Yeah, so the super great thing about why this is such an important innovation is because it is the first step in being able to change the way that we process assets, right? So today, one of the limitations of our system is even equities, which are the most effective markets, still take at least 24 hours to settle, where you exchange payments and the asset. With our token-based, blockchain-based system, we're exchanging the assets and the payments instantaneously. And this is going to be applicable not just to money market funds, but to any fund that we launch on these platforms. You're going to be able to have real-time settlement, what they call atomic settlement of transactions. And that will allow the velocity of trades and the volume of trades to increase exponentially, which will bring more people into the system and allow us to use our assets in much more effective ways, staking them, lending them, putting them into liquidity pools. These are going to become common financial practices for every individual and every institution in the world over the coming few years.
Stablecoin legislation is going to allow banks, institutions, all these different financial asset managers to take on stable coins, lock them in liquidity pools, and this is going to be very beneficial for the U.S. government. The U.S. Treasury market is cracking and breaking, and interest rates continue to rise. This puts a lot of pressure on home building, on the larger economy. So U.S. debt is backing tokens. These are stable coins. These big banks, financial institutions take on their stable coins, pair them to other assets, and provide liquidity. They're locked in liquidity pools. So this locks in a lot of the U.S. debt. This is stopping U.S. debt from being sold and putting more pressure on the bond market. Not to mention, stable coins are going to be used as a payments vehicle. So people are going to essentially use stable coins as they would cash.
Yeah, so I think Shopify rolling out stablecoins across their platform is a watershed moment for crypto, where for the first time, stablecoins are fast, cheap, easy, and they're getting rolled out into a real consumer payments experience. You know, Shopify had 875 million people pay on Shopify stores last year, more than $1 trillion of value processed. And now all of those folks are going to have access to stablecoins over the next year. And so for us, this is exactly the kind of real world crypto adoption that we are trying to drive. And when we think about Base, Base is a chain, but really what we're doing is we're building a global economy. Where you can build use cases like this, like stablecoins, like payments, like social apps, really like anything you can imagine, and have it by default be globally accessible. So regardless of where you are, you can tune into this new internet, the on-chain internet, and get to participate with all these new products on-chain.
The U.S. Treasury issues debt on behalf of the U.S. government. So if there's not enough money to pay the bills in the U.S. government, the U.S. Treasury issues treasuries, and that goes into the treasury market. Foreign investors, banks, investors, anyone may want to purchase this debt, but it's not used for money. You see, now what we're doing is we're seeing fintechs purchase U.S. debt, back tokens with it, and we're seeing those tokens being used as money on the internet. So this is a very different dynamic. This is a reset before your very eyes. Cash is a liability of the Federal Reserve. So when you see cash circulating, this is IOUs that the Federal Reserve is issuing, and people are using it to purchase goods and services. Now, instead of the Federal Reserve, you're seeing the U.S. Treasury issue Treasury bonds that are being backed by tokens that are now being used for cash.
Crypto, that seems to be a threat to the dollar, doesn't it?
I think it's the opposite.
Oh, really?
I think stable coins could reinforce dollar supremacy, because with stable coins could end up being one of the largest buyers of US treasuries or T-bills.
Mm-hmm.
So all of a sudden, if you are using a stable coin in Nigeria that's backed by the US dollar, you don't actually have to have dollars. It's on your phone. You can transact. So I think there's a very good chance that crypto is actually one of the things that locks in dollar supremacy.
Central bankers are very concerned over the idea of spillover effects. And this is the idea that people are using currencies outside of their own jurisdiction and replacing it with other currencies. And this is Scott Bessenet's plan. He's telling the journalists that we want spillover effects. We want the rest of the world to use US dollars because this is demand for the debt that we acquire. The banking system, the financial system, is made up of assets and liabilities, and this time the assets and liabilities are being flip-flopped.
Also, interestingly, Ripple, as I mentioned, we built a product which focused on last mile payouts. So if we're making payouts across Africa, we're looking at local transaction settlement in the local currency. But a lot of our customers were kind of, saying, hey, well, actually, we want to settle in dollars into Africa. We want to settle dollars into China. If you look at the import-export kind of business into China, majority of it is actually still settled in dollars. So our solution was very beneficial if you needed a local payout. Now, with a option, once it's launched, to be able to actually settle in a US dollar-backed stablecoin to achieve that real-time kind of nature repayment, we're hoping we're going to see some tremendous kind of benefits from all there.
Businesses are going to be able to accept US dollars through stable coins, and this is instant settlement. So trade is going to happen at lightning fast speeds. When settlements happen instantaneously, there is a lag that happens within trade. This is going to pick up the pace that trade occurs. This is going to pick up the pace for financing, payments, everything that you can imagine. This is going to add tremendous efficiency into the global economy.
Circulation of stablecoins. I think there was an article I read where, there's in 2023, it was $10.8 trillion worth of movement of stablecoins. Now, a decent portion of that will be in terms of cross-border settlement, remittance. Some may be for on-off ramping. And I think this amount could kind of increase to 76 trillion by 2030. So these are astounding numbers. And really what we need to ensure is that, we have the regulatory frameworks in place, we have the right infrastructure to be able to kind of do that.
76 trillion by 2030. This is an enormous amount of capital. And if you think that the US dollar is going to uproot a lot of these currencies without any type of consequence, I can assure you that that won't be the case. If you were the ruler of your nation, would you want your citizens using another country's currency? The United States has sanctioned quite a few countries over the years, and when we see the dollar start being embedded into the financial system of other countries, I would assume that those countries would sanction the US, and then there would be some type of a response from the US. Also, keep in mind that the US dollar is not backed by anything. It is a fiat currency. And this gives the green light for the United States to print more money, and they're going to do that. They're going to print more money. So as stable coins start gaining traction and it's pegged against every financial asset, we're going to see an exodus from the US dollar into crypto assets.
But a large amount of those dollar payments aren't necessarily being settled into the US. So what does that mean? It means if I'm based in the UAE and I want to make a payment to Africa in US dollars, essentially my money is going to leave Dubai, it's going to go over to the US via correspondent banking, then it's going to come back to Africa that way, which is a costly, not a very efficient way of being able to kind of move funds. So we believe that stable coins and US dollar backed stable coins, as amongst others that will, I think, continue to come into the market, basically solve some of those inefficiencies and really kind of speed up the process for transactions to be sent and received.
It's very exciting to see some of these large banks and institutions dive into the crypto world, but it's very unlikely that these large institutions will be able to compete with a lot of the nimble players in the crypto world. They are not very good at innovation. It's likely that a lot of these large institutions will fall belly up over the next 10 years. And what does that mean for the rest of the crypto world? What does that mean for global economics? Every industrial revolution brings along a learning revolution. Thanks everyone, I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon.